Twitter for updates on when it will release and everything else. Remember to drop the like on the video if you like the content and find it useful, and without further delay, let's get started. There is no way around this. Short sellers have lost $44 billion in the last 30 days. The main source of this massive net of financing loss is championed by AMCSTOCK, and it was the largest by a comparatively wide margin, at $2.8 billion. AMC also happened to be the second stock in the stock market to have had an increased short exposure in the month of June. I made a video yesterday that if you didn't watch, I will highly advise you take 5 minutes out of your time and watch the first half of it. It goes over all the different factors that make AMC and GameStop essentially the safest stocks to hedge for poor market conditions. It is a fool's gamble to bet against any of these two stocks, because their ever-growing popularity alone will carry the general stock price upwards over time. There is no winning scenario by which anyone can buy and short these stocks with a rational expectation of profiting. These stocks can at any time jump up, so I really do not understand why anyone would place themselves in a position to amount massive losses. And what better entity to exemplify and lead these losses than the infamous Melvin Capital? The notorious hedge fund has reported to still be struggling this year with the rise of meme stocks, and had ended the first half of the year 2021 with a 46% loss. There is a surmountable amount of work to be done to recover from this, and though they gained 1% in the month of June, Melvin is still struggling heavily with recovering. The hedge fund lost a nasty chunk on the month of January when GameStop surged, ending the month with $8 billion in assets, which was down from $12.5 billion at the start of the year as reported by Bloomberg. Anyone thinking that now would be a good idea to start shorting AMC and GameStop are really stubborn and could potentially have a learning disability. I advise you to lay off the stock market and seek mental evaluation, because you are doing everything wrong. Another interesting set of news that I didn't cover yesterday but still want to talk about is that Citadel has experienced a number of people exiting the company. They are now setting their eyes into hiring from rival hedge funds in London, as some of its own veterans have been leaving in droves. The reason they are trying to hire directly from their own rivals is because hedge funds in general seem to be struggling to find portfolio manager candidates in banks, and therefore are hiring portfolio managers. Today's reverse repo operations by the Fed mounted over $780 billion. Dark pool trades for GME accounted for 48% of the total volume, while dark pool trades for AMC accounted for 65% of the total volume today. Before we start talking about the price action we saw today, let me put out the disclaimer that I am no financial analyst, and everything discussed in this channel is my opinion based on hours of research I do every day to provide you with a clearer understanding of everything going on. AMC had a very interesting and chaotic pre-market. You could tell that the tug of war between hedge funds and their naked shares against retail investors did not wait until market open to begin. The stock had fallen from $49.99 to $47. Then, the stock progressively started climbing up, passing the VWAP and moving all the way to almost $50. The stock then retraced a little bit on the VWAP line but did not consolidate enough at those levels to have a huge breakout. Upon market opening, AMC fell down to the lower band of VWAP, which was a little above 46.50. The stock then bounced back but didn't manage to break the $49 resistance, so it fell again and experienced some tumultuous volatility for up until 11 a.m., where the stock dipped below $46. AMC had a very weak recovery, and this was exemplified by its inability to really move strongly above the VWAP. That signaled to me that the stock was manipulated to the degree that bullish volume was not going to be in control. We eventually fell below that support line that built for around an hour and a half, and tested $46 as support. The stock had a tiny little breakout minutes before market closing, but nothing serious, as the stock was dipped to closed at 46.19. It was sad to see that we did not manage to close above $50 again, but I take the defeat with a smile, because those that have been buying and will be buying into next week will be able to get a cheaper price for their shares. Remember, fellas, the only thing that we care about on the day-to-day price action is for consolidation over elongated timelines, so that we can have a good idea of where the floor is, so that we can purchase more at a cheaper price. Do not stress too hard. We know the price of AMC is an illusion just as much as the price for GME is. There were reports that indicated AMC was selling for $1,500 in dark pools between hedge funds and other institutions. I know just based on volume that the stock should be well over in the thousands, so the fact that we are still trading in the 40s is a blessing in disguise. GameStop had a much better performance than AMC today, primarily because it consolidated and moved up aggressively. Remember, AMC was the main target for hedge funds and other shorters this week. They wanted to defeat the stock from consolidating in the $50 range and constantly retesting that $60 resistance wall. As such, more resources must have been poured over there, which is why GameStop has been trading under less bearish conditions. GameStop started moving up in the pre-market, but its success over there did not translate to normal trading hours. The stock fell continuously for the first 30 minutes of trading. Then, it seemed to have found a bullish wave of volume, and the stock started moving upwards for most of the day, reaching and even passing the upper band of the VWAP line. The stock fell back down on top of the VWAP line, where on each bounce it would have less force moving up. GME eventually broke support and reached 189.51. Then, it began an ascending triangle, building pressure into closing. The stock ended the day at 191.23, which was very bullish to me. The performance was less volatile than AMC, and built some support in particular around 190. I will of course include a technical analysis into what to expect from both of our beloved stocks into next week on this Sunday's video, which stay tuned for because you do not want to miss it under any circumstances. With that, we made it through another week of hardship. I am so proud of all of you for holding and buying the dips. You guys are the absolute best. Let me know in the comments if you like the video and if you have any fun plans for the weekend. Also, don't forget to drop a like if you found today's content enjoyable or useful, it really helps the channel. A big shout out to my Patreons and one-time donators for their support of the channel. Simulate and Trade wouldn't be here without you guys. Thank you all for making it to the end of the video, and I will see you all on Sunday.